Hey, it's Patrick Moore with Ironclad Wealth Management here, and I've got a video on beneficial ownership reporting coming up. And I know you may have just internally groaned and said, wait, what? Is that something that cannot be fun to talk about? Unfortunately, it's not fun to talk about, which I'm not doing a great job of selling this video, but it is something that if you're a business owner will apply to you moving into 2024. And my goal is going to be to talk about it real quick, give you the highlights, and kind of give you some ideas of what you need to do moving into the future. Now, before we really get into this, I do want to kind of give my usual disclosures, right? We're going over general information, it's not specific, but stick with me. Hopefully, it'll educate you and you'll have an idea of what you need to do once 2024 rolls around. So, why are we having, or why am I making this video today? And I am making this video today because in 2021, Congress passed what's called the Corporate Transparency Act. And you may be asking yourself, okay, that's fine, but we need to rewind to talk about why this was necessary and why Congress passed this law. If you think about when you actually formed your business, you went to your state. I'm in Georgia, so I went to the Georgia Secretary of State website and I filed and organized my business in Georgia. If you're in Alabama, you did it in Alabama. If you're in California, you did it in California. And what that means is that the governance of businesses and their registrations and formations is completely done at a state level. So the laws governing that are completely different. For example, Wyoming, South Dakota, Delaware have completely different laws from us, and some of them actually almost require like no disclosure as to who owns any LLCs or business entities. So because of that, it's very hard for the government to determine who's actually benefiting from some legal activity that is going on through those entities. So what the CTA did is they basically said, hey, we're going to create a federal register and disclosure that every year owners of reporting entities have to report who benefits from those business activities. So that's the reason that this exists, right? It's to reduce illegal activity. But the question becomes, hey, what does that mean for me? I'm not doing anything illegal. What do I need to do to continue to operate my business? Well, like I said, it's a completely new standard. And the first thing to understand is, does your business qualify? And the answer is probably going to be yes, because it's actually more of an exception idea, right? Every domestic entity and foreign entities registered to do business in the U.S. are required to do this form. Now, there are some notable exceptions. There's about 23 of them. Here's a few big ones. The first, if you're an operating entity with over 20 full-time employees and $5 million of gross revenue with a physical location in the U.S., you should be exempt. If you're a publicly traded company, which, obviously most of us are familiar with those, you wouldn't have to file. And then there's certain industries like myself, investment advisors, accountants, banks, think of those types of businesses that already have some strict disclosures and reporting. Those are also exempt because you're kind of duplicating what you're already doing. But as you can see, almost every business, especially small businesses in the U.S., are going to have to report. Now, once you determine if your business reports, what do you actually have to report? Well, you have to report who is involved in benefiting from the company. So when they talk about beneficial owners, they are referring to somebody who exercises substantial control over a company. Think of a CEO, president, CFO, kind of C-suite type senior officers. And then the second test is going to be if you own or control 25% or more of the company directly or indirectly. So that could be things like if you're a trustee of a trust who owns a business, if you own options that might give you, the ability to own a business, profit interest. It's a pretty expansive definition. Everything about this law is very expansive. So it's one of those situations where it's probably going to be a situation that the more you assume you have to disclose, the better. Now, when does this go into effect? Well, if you are contemplating forming a new business, if you form it after January 1st, 2024, you have 90 days to report this. So this law goes into effect January of 2024, and there's a 90-day window in 24. However, after 2024, that window drops down to about 30 days. So you just have to do this whenever you form a new business. If you already have a business, you're probably groaning, like I said here, because you got another reporting requirement that's been added. But your existing entities have a deadline of January 1st, 2025. So it's a 30-day window starting in 2025 for you. But if you have an existing business and you change ownership, you also have to disclose that within 30 days. And if you have an existing business and maybe you buy a piece of real estate and you put it in a new LLC, guess what? That's going to be a new entity, which then has to be reported in 2024. Now, to do all this, what do you need to do? Was the Financial Crimes Enforcement Network, or FinCEN, that does all this reporting. So you have to report your companies if it's a reporting entity, report identifying information on the beneficial owners, and then you have to electronically file it through FinCEN. So the portal's not even live yet. It goes live January 1st, 2024, but that's where you will do it. And if you don't, you're not going to like it. So if you don't, there are criminal and civil penalties. It's 500 per day of, delinquency. So every day past day 30 is a $500 per day fine under the civil regime. And if it is criminal, it's up to 2 years imprisonment and a $10,000 fine, which, is probably like, catching Al Capone for tax fraud, right? So the goal is to catch the people really doing things wrong. And as long as you file, you'll be okay. Now, real quick, my offer to you is, unfortunately, I can't do this for you. Your CPA can't even do this for you based on current interpretations of the law, because this is considered an actual legal matter, this reporting. So it's a situation where you do need to either have an attorney or do this reporting yourself, because CPAs and financial planners can't help you. Now, I do work with business owners, 1 to 25 employees. So if you found this helpful and you have anything else you want to talk about, I'm happy to take 20 minutes, just chat. No cost, no obligation, and see if I'm right for you. But I hope you found this helpful. Like I said, I couldn't promise this was going to be an exciting video, but hopefully it was a helpful video. And if you have any questions, like I said, feel free to reach out, and hope you'll have a good rest of